Prime Minister Datuk Sri Anwar Ibrahim says the East Coast Rail Link or ECRL project will proceed at a reduced cost of 74.96 billion ringgit, down 11.01 billion ringgit from the original 85.97 billion approved in 2016. This new figure includes additional costs following the new realignment with few changes to the project. Speaking to the press after chairing today's cabinet meeting, he said the project is still subject to the original agreement. The ECRL project spans 665 kilometres and comprises 59 tunnels. It will stretch across 4 states, namely Kelantan, Terengganu, Pahang and Selangor, and the entire alignment should be fully completed by December 2026. Anwar also announced today the disbandment of the National Recovery Council, which was headed by former Prime Minister Tan Sri Muhyiddin Yassin. He said the agency was created to meet the needs at the time when the COVID-19 pandemic was at its peak, and that there is now an overlap of responsibilities with some existing government bodies. On the reappointment of former Machang lawmaker Datuk Ahmad Jazlan Yaakob as Felcrat chairman, Anwar said the decision has been put on ice. He added that he has never barred the appointments of political figures to the board of government-linked companies, statutory bodies and MOF Inc. firms, and that what matters is the individual's capabilities and past performance. RHB Investment Bank research estimates that Petronas' capital expenditure will range between 45 billion ringgit and 50 billion ringgit for the financial year ending December 31st, 2023, with a 20% allocation to clean energy solutions. In a sector update today, the research house said the national oil and gas giant previously allocated a higher capex of 60 billion ringgit for 2022 as it prepared for the resumption of business activities and as it set aside money for clean energy or non-hydrocarbon-related ventures. However, RHB said Petronas' capex spending for 2022 could potentially land below its 60 billion ringgit target, as the cumulative 9-month spending stood at 27 billion ringgit. Overall, RHB maintained an overweight call on the sector. Its top picks are Dayang Enterprise Holdings with a target price of 1 ringgit 28 cent, Yinsen Holdings 3 ringgit 28 cent, and Bumi Armada 61 cent with a buy call on the 3 counters. On the Brent crude, RHB kept its projections at $90 per barrel in 2023 and $80 in 2024 and 2025. A UK-based consulting firm says a think tank's proposal for the 5G spectrum to be licensed to individual operators versus a single wholesale network under DNB can in fact cost 4 to 5 times more. Plum Consulting London said in a statement today that Emir Research had assumed that DNB's network involves active radio access network sharing, which would make it impossible for mobile operators to compete in service innovation at the network level. But this is inaccurate, it said, since the spectrum is not shared under DNB's single 5G network. Plum Consulting explained that each mobile operator would continue to innovate in their core networks in terms of the services offered, while buying 5G access at prices well below the cost of 4G access. It also refuted Emir's claims that DNB's costs in rolling out and operating the single wholesale network will increase substantially and will not lead to lower end-user prices. In contrast, the firm said rational economic analysis indicates that Emir's proposal will result in wholesale 5G costs that are 4 to 5 times higher, and explained that rolling out 6 5G networks, one for each mobile operator, would require 6 times as many 5G base stations. Aeon Credit Service Malaysia saw its net profit decline by 19.2% to 83.63 million ringgit for the third quarter of FY 2023 on the back of higher impairment losses on financing receivables. However, it booked an 11% increase in its revenue to 417.84 million ringgit due to stronger loan and financing growth. No dividend was declared for the quarter under review. Total operating expenses grew 53.8% 2% to 279.7 million ringgit on higher impairment losses on financing receivables of 143.41 million ringgit against 33.09 million the prior year. Other income decreased by 16.4% to 42.2 million ringgit, mainly from bad debt recoveries, and total transaction and financing volume rose 30.3% to 1.55 billion ringgit. Non-performing loans ratio was 2.52% compared with 1.75% as at the end of November last year. Looking ahead, Aeon Credit remains cautiously optimistic its business revenue will gradually improve to pre-pandemic levels. Barring any unforeseen circumstances, the group expects to be able to maintain its financial performance by putting in place the appropriate measures for FY 2023. Aeon Credit closed 0.48% lower at 12.52 ringgit, valuing the group at 3.2 billion ringgit. ACE Market-listed Supercomnet Technologies, which has been saying it wants to apply for a transfer of its listing status to Bursa's main market, plans to submit its application to the regulators in the next 3 months. Approvals are required from the Securities Commission (SC), Bursa Securities and Supercomnet shareholders. The proposed exercise is expected to be completed by next June. In a filing with the local bourse, Supercomnet said the proposed transfer signifies the growth, profitability and financial strength of the group, as it has met the profit track record requirements for the transfer. It said it achieved an audited net profit of 25.21 million ringgit in FY 2021 and an aggregate audited net profit of 68.1 million ringgit for the past 3 financial years of FY 2019, FY 2020 and FY 2021. Under the SC's guidelines, a corporation is required to achieve a net profit for the most recent financial year of at least 6 million ringgit and an aggregate audited net profit of at least 20 million ringgit for the recent 3 to 5 full financial years. Listed on the ACE market on April 30th, 1999, Supercomnet is primarily engaged in the manufacturing and sub-assembly of wires and cables for medical devices, electrical appliances, consumer electronics and automotive parts. At the close, Supercomnet's shares were 4.4% higher at 1 ringgit 67 cent for a market value of 1.27 billion ringgit.